Disney reported earnings before the market opened on Wednesday. Not much of a reaction from the market, which I thought was interesting, but results were actually pretty solid. The company's margins continue to get better. Profitability continues to get better. So I think it's worth digging through those results. This is a stock that I own. And I think this is one of the companies that's going to be very interesting to watch later this year when the ESPN goes over the top. That becomes part of their streaming bundle. I think that's ultimately the biggest reason to be bullish on Disney. You have a solid foundation with their experiences business. And then streaming is really the growth driver long term. So that's the context with which I'm going to look at earnings. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at the results. And one of the little notes I wanted to start with is that they did not include the normal presentation that they give with their earnings results. They gave a lot of the same information, but that's why this is going to be in mostly text form, not a nice image. But you can see that revenue was up 5% in the quarter to $24.7 billion. I'll go through the details of exactly what was doing well and what wasn't. The bigger thing was that income before income tax is up 27% to $3.7 billion. This has really been the focus over the past couple of years, is cutting costs and getting back to profitability. So that's where you get earnings per share increasing 35% to $1.40 per share. Direct to consumer in the entertainment segment, this is going to be the streaming business. That is now operating income positive and very positive at $431 million. 178 million Disney Plus and Hulu subscribers, just a small increase from Q4 of fiscal 2024. It is the first fiscal quarter of 2025. That's what was actually just reported. Disney Plus subscribers down a little bit. I'll get to their guidance for that. But this does not include the impact that you would have from a lot of the movies that are going to be moving to Disney Plus a little bit later on. So that will likely be a bit of a delayed impact from successful movies like Moana 2. That was what helped the content sales and licensing increase their operating income to $536 million. Sports, kind of steady as it goes. Advertising revenue was actually up 15%. Thought that was interesting. And operating income did increase a little bit to $350 million. So a lot of cost cuts that have gone on at ESPN, and that has helped stem some of the losses on the linear side of things. Experiences continues to do extremely well. Their segment operating income, $3.1 billion. Just phenomenal momentum in that business. There's also future impacts that we're going to see from things like new cruise lines coming online, and then also expansion at the parks. They're spending about $60 billion to expand that business over the next decade. I'll come back to guidance in just a little bit, but let's actually break down things on the entertainment side. The linear networks, so ABC, ESPN, all their cable networks, continues to be in decline, down 7%. But what I think is interesting is that revenue is actually up 9% because of the success at the studios and a 9% increase in direct-to-consumer revenue, partially because they are now raising prices on things like Disney Plus and Hulu. So linear networks still in decline, but it's starting to be offset by some of those other pieces of the business. That has helped the operating income. And here's that direct-to-consumer business, $293 million, a huge improvement from a year ago. Some of the direct-to-consumer numbers, not all that impressive, especially in a quarter that Netflix actually did really well. But you do say a slight increase in the number of subscribers at Disney Plus. Domestically, total, they were down a little bit. Hulu was actually up. I thought that was interesting. Hulu's doing relatively well right now. Prices are going up. So Disney Plus increased to $7.55 in their average monthly revenue per paid subscriber. Hulu is about flat. This TV business is actually going to go to Fubo. So that's not going to be part of the business long term, but those are continuing to do well. And here's the other big business. This is the movies. So 34% increase in revenue from content sales, licensing, and other. Sports is another segment in here. This is basically where they split off ESPN. I think they didn't really know whether they were going to keep ESPN or divest it. So we now get the numbers pulled out, an 8% increase in revenue overall. I think that would probably surprise a lot of investors. And a 15% increase in operating income, $228 million. Experiences, this is the stalwart business. This is where there's just cash coming in quarter after quarter after quarter. $9.4 billion in revenue, $3.1 billion in operating income. Yes, not a lot of growth, but that's okay because this is just a steady business doing almost $10 billion in operating income annually right now. The other thing is they did give some guidance for the year. Gave second quarter fiscal guidance and then full year guidance. I think the important thing is that not a lot is going to change in the next quarter. Entertainment and direct to consumer, modest decline in Disney Plus subscribers compared to Q1. Sports is going to be adversely impacted by $100 million due to college sports costs and then the one-time additional NFL game, and about $50 million in exiting their Venue Sports joint venture. Experiences, new cruise line, but there are some operating costs in the pre-opening expenses related to that. For the full year, high single-digit earnings per share growth compared to 2024, approximately $15 billion in operating cash flow. So for perspective, Disney's enterprise value right now about $250 billion. That means that shares are traded, or the valuation of the company is about 17 times operating cash flow. Double-digit increase in operating income growth in entertainment, sports expected to be solid, experiences 6 to 8% segment growth, and then cruise lines pre-opening expenses of $200 million. On the conference call, it really sounded like a lot of these were kind of sandbag numbers when you look at the introduction of ESPN over the top this fall. That is going to be late in the fiscal year, but it will likely have an impact, especially on that direct-to-consumer business. So we'll see how that plays out, but I think that's ultimately where there's the reason to be the most bullish for Disney long-term, is that if they can bundle those three services together, Disney Plus, Hulu, and ESPN, that's a formidable competition to even a company like Netflix. There's really nobody else that has streaming sports at the scale that Disney does with the NBA, NFL, all kinds of other content. And I wouldn't be surprised to see more deals come up over the next few months before that product actually launches. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So Bob Iger seems to really have done a lot to control the costs at Disney, turn those studios around, but it is going to take time for that flywheel to really kick in to drive more experiences revenue, more streaming revenue. They did have the top 3 movies at the box office in 2024, so that's going to help the momentum of the business, but you got to keep that going if you're Disney. That's really the key to the company's success. And like I said, what I'm going to be watching is ESPN going over the top in the fall. I think that's going to ultimately be a draw to tens of millions, if not potentially over 100 million subscribers domestically and ultimately worldwide. That could be a really innovative service. They've been working on this for a very long time. So if it isn't a phenomenal experience, that's going to be really disappointing. They've talked a lot about sports betting. That's, I think, a little bit of a concern. Is that going to be really front and center, or are we going to be able to kind of turn that off if we're not into sports betting? I know that's a big revenue generator, but that's also something that could peel away certain viewers. So they continue to talk about that. That's the one caveat, is I want to make sure that this is going to be a experience that's going to be good for everybody. But sports is going to be a huge business. And I think that really, we can't really look past. And this is the one company that has a critical mass of sports to put on streaming. If they can get another one of those companies to partner with, like Fox, like Paramount with CBS, I think that would ultimately be really valuable. But we'll see if any of those deals are out there. ESPN, don't be surprised long term if we get to 50 million plus subscribers and potentially revenue per subscriber of $30 a month plus. This is going to be big money for ESPN and for Disney, but there may not be many catalysts until then. So I think this was a solid quarter, solid improvement on the bottom line, but obviously the market didn't have a whole lot of reaction until we see what's actually going to go on with ESPN. So stay tuned for that later this year. But let me know what you think about Disney right now. Is it a value? This is a stock I've added a little bit in 2024. Haven't added yet this year, but could depending on what happens with ESPN. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.